Hi, welcome to the Market Alert for Monday, the 16th of March, 2020. If I sound a bit tired, that's because I am. What a night, to say the least. Sunday evening, the Fed panics. Powell cuts rates to zero, announces 700 billion QE5, and unveils enhanced global swap lines. Oh dear. Houston, we have a problem. In fact, we have a major problem. 3 years ago, I recorded a video called The End of the Financial Road, the coming global financial meltdown. Well, that has now turned up as we see the Fed, as expected, drop rates to zero and then announced 700 billion in QE5. However, the bad news is it didn't work. Within a matter of the overnight markets opening, the futures crash. They were halted limit down. Gold and Treasuries soar after historic Fed panic. And as it says here, the Fed has a very big problem on its hands. And of course, combined with the coronavirus thing that I've spoken about in the market alerts, how all of this fits into the picture, it sent me down the rabbit hole doing more research, which we'll come to in just a moment. You're going to have to watch Deutsche Bank on this one today if they open the markets. At the moment, they're not open. And just to show you, there's the Dow Jones Opening. We were expecting a 1,000 point rally. The market went limit down within a matter of minutes and has remained that way ever since. I would imagine that Powell hasn't been to bed either. The Munchkin, Steve Mnuchin, too, is probably up, as is Carney, as is the criminal Lagarde, and also in Japan as well, to see what they can do to sort this out. Can't load any charts because we have no live data coming through for the stock markets. The currency markets are open, the metals are open, but at the moment, not a chance of the stock markets opening because they will be in free fall. So watch Deutsche Bank, see where this opens. It was still below $6 on Friday, $5.97. I believe that this is the problem behind all of this, which I talk about in this video here 3 years ago. Ridiculed, mocked, told I was a conspiracy theorist. Well, if you think the coronavirus is a problem, then wait until we get to Friday after a week of carnage in the markets. They're going to do everything they can to pump the markets up, but unfortunately it's too late. The coronavirus was the straw to break the camel's back with this one. Right, this is what I wanted to come to. Yesterday, as I say, I went down the rabbit hole. As I say in one of the other videos that I recorded as well, the only way to preserve any wealth in situations of uncertainty, in particular financial uncertainty, is to own precious metals. And again, I wrote that and recorded it 3 years ago. I heeded my own advice, and now we find ourselves in a position where the gold and silver market has been slammed last week for the very simple reason so the elite can buy up the gold and silver at very cheap rates. So this got me thinking about the gold and silver ratio yesterday, and the gold and silver ratio is basically the number of silver 1 ounce coins that you can buy for a 100 ounce bar of gold. And I managed to pick up this data going all the way back to 1900. And I could see that the ratio of 20 coins to 1 ounce of silver back in 1918, then that was at the end of World War I, so a bit of stability. As we got to the start of the Second World War, we can see that the gold ratio was 100, and it hasn't been like that until we get to today, which I'll come to in a moment. Then in 1969, man lands on the moon, everything's fine, honky-dory. We then see the gold-silver ratio rally up to 83, the second highest, to the 1973, back at the start of the Second World War. And then I couldn't believe my eyes when I saw this. This happened last week. 105 silver coins to 1 ounce of gold. What does it mean? Well, the only thing that it does mean, I'm not buying into the war thing here or scaremongering, but what it means for me is simply that the financial system that has been burdened by debt for the last 40 years, and particularly the last 10 years where they've printed like lunatics, this for me is screaming major problem. So it's backed up. And oddly enough, I created this yesterday afternoon, and then yesterday evening, this is hits the wires. So where do we go from here? Well, it's going to be carnage if they can actually get the markets open, and we'll have to see. I mean, the German DAX is also closed at the moment. The European overnight markets are closed. This is just stock markets, so I wouldn't be surprised if they don't put it on shutdown. To be honest, I had a look at the Treasuries as well. This is the 3-month, 2-year. We can see that we've got that spike that I've spoken about in the last few weeks. Once you get the inversion out of the way, then you see interest rate spike. Expect more of this going forward. So really, that's all I can say at the moment until the markets are allowed to open. We'll just have to wait and see. But the silver price is moving to the upside only slightly. Nothing to see at the moment. So let me just change these price bars so we've got something that's more familiar. We can see how the silver market and gold market gapped open, made a 76% retracement, and is currently moving lower there. I don't think they'll be down in the lows for too long, personally. I think by the end of the week we will have seen a pretty good move inside of precious metals market. Okay, that will do it for this one. I will report in as things unfold. But at the moment, stock markets, overnight futures, limit down, markets closed, not moved on the overnight at all. So let's see what happens today. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.